And then we get aha moment, Bitcoin. Now, what's really important for your listeners, and I know this from my global investing, 5 years before Bitcoin was released in January of 2009, before that came a technology called M-Pesa. And M-Pesa was the telecom wanting to find a way to bank the unbankables in Kenya. And it exploded.
This episode is brought to you by Proppy, which is leading the charge in putting real estate on chain. Proppy is a game changer. You can buy and sell real estate with cryptocurrencies using the Proppy platform, which is powered by a blockchain, of course, and they have a native token called Pro. And I've been an investor in the Proppy token since 2018. So Proppy is a licensed Web3 pioneer operating since 2017. They have facilitated over $4 billion in transactions. They're putting titles and deeds on chain. They use Coinbase for their crypto escrow service. So this is a great platform. And once again, they are ahead of the curve when it comes to putting real estate on chain. And they just launched a great campaign where you can earn some of the Proppy tokens. And it's simply by doing tasks such as sharing their vision video, signing up and inviting a friend, and much more. So if you'd like to learn more about Proppy, visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and my guest today is Frank Holmes, who's the co-founder of HIVE Blockchain Technologies and also the CEO and CIO of US Global Investors. Frank, great to have you.
It's great to be with you, Tony.
Frank, you have a plethora of experience in the markets, from gold to doing IPOs and TradFi, and now, of course, building with Bitcoin and crypto. And I have a lot of questions for you because I want to get your perspectives and your loads of experience. But let's start with your background. Where are you from? Where'd you grow up? And what made you want to get into finance?
Well, I like to characterize myself as a Texcan, a Texan Canadian, and I've been living here for 35 years in Texas, in San Antonio. And I'm known for the world of gold. I wrote a book on gold, and that journey of understanding the dynamics of gold, what are the supply demand factors globally, gold mining, and you start to realize it takes you down other paths. And the gold space led me down to Bitcoin. And in 2015, I launched the first thematic, what they call Smart Beta 2.0 JETS ETF on the New York Stock Exchange to capture the global airline industry, because I was traveling all over the world. I want something so how do I get my money back and all this money I'm spending traveling? And so I recognized that something was happening in the Bitcoin ecosystem. I went to Consensus in 2017. And I remember vividly Abigail Johnson, the CEO of Fidelity, was speaking at the conference and was talking about Bitcoin mining and blockchain, why it was so important for the backbone. So I'd done work prior to that and said, okay, well, let's see if we can launch a Bitcoin ETF, because I launched the JETS. Well, I realized quickly at $1,000 an hour legal bill, it wasn't going to go anywhere. And I went to Canada and the same thing. They were basically anti-Bitcoin ETF. And fortunately, it didn't really occur until last year that it finally got launched, a Bitcoin ETF. So I launched the first crypto mining company called HIVE Blockchain Technology, and then subsequently changed the name to HIVE Digital Technologies, because you realize you're really in the data center business. And I'll give you more color on that. But it was the first crypto mining company. And when we went public, we had some basic value vision statements that we made. And that mission was to be green only. So we launched in Iceland, and then we went into Sweden. And then after the first halving, we came into Canada in Montreal. And then we built a big campus using 80 megawatts on the border of Maine and New Brunswick. So we're only using hydroelectricity. And now we've grown to Paraguay, where we're going to increase our production profile from 6 exahash to 25 over the next 9 months. So we function in 9 time zones, 5 languages. And I'm so proud of the team, Tony. We keep showing up at Anthony Power as the most efficient Bitcoin miner.
That's amazing. And what a journey, Frank. And you were trying to get an ETF around Bitcoin in the early days, and certainly it's been an arduous journey for many folks to get to what happened last year with the final approval. What are some similarities that you see with the gold market and Bitcoin? Because many folks categorize Bitcoin as digital gold, that store of value, has some better properties around it than gold itself. And maybe when you heard Abigail Johnson, or what was your first encounter with Bitcoin, and when did it click for you? What was your aha moment?
Well, the haha moment is that someone is one of the largest asset managers in the world. It doesn't speak at investment conferences, but speaks at consensus, and that was saying something big is happening outside of this realm, this world. There's another metaverse, and exploring and discovering the metaverse of crypto was so like shocking to me. Like I feel like I was kept in a cave of how it was evolving, and learning that there's 30 million kids around mining Ethereum with their GPU chips when they went to bed. So you had this incredible ecosystem before they went from proof of work to proof of stake, which was a bit of a disaster. But back then it was interesting to see these kids were gamers, go to bed mining Ethereum. I had a paper route. I schlepped papers in the snow in Canada in the 70s, earning money. And these kids are all of a sudden mining Ethereum, and they found a way at the age of 12 years old to get cash for it to upgrade and buy a new computer system. So the exchanges have been created outside of the normal regulated world, and methodologies to crystallize and transform this transformation of something digital into cash to be able to upgrade a computer. That was an awe to me, and I became so accelerated, in learning what was going on.
And with regards to what you said about the kids mining, right? We're heading to a more digital world. I think we can all agree on that. Things are not going to get less digital. And the next generation is not going to necessarily want to have gold bars, so to speak, but they're going to deal with digital currencies and NFTs and these different things. Do you see Bitcoin becoming a larger asset than gold itself, having a larger market cap and so forth?
Hey, it's a good question. I think you'll probably find some way how the ordinal art world was able to take a 100 millionth of a Bitcoin and all of a sudden create value by attaching something to it. That's going to happen with gold. I know that I was funding and was an early investor in the creation of where you make that attachment like an NFT, but you actually have a piece of art that's transferable into 1 gram of gold that can digitally be sent around, and you can make a claim on it somewhere else. So that technology will evolve, and I think probably they're going to become where there's 1 and 1 is 11. I think the whole idea that when people don't realize, and all these people buying the Bitcoin ETFs, RIAs recommending them, they do not know often that 1 Bitcoin is worth 100 million Satoshis.
Right.
And if they go and buy a penny stock, they might as well just go and spend $1,000 and buy $1,000 of HODL, HODL, which is VanEck's Bitcoin ETF on Robinhood, and they've got 1 million Satoshis. And when that Satoshi hits a penny, that Bitcoin is worth $1 million. Well, will that happen? We found from our Bitcoin inventory that some of our Satoshis were very valuable because of their number sequence at the time that they were mined, and they were worth $10. So when someone said to me that Bitcoin go to $1 million, I said, easy, because it's not just, it just has to be at a penny, it's worth $1 million. So the math behind that is Metcalfe's law, which basically says that if you have supply limited and demand grows, the price will grow exponentially. I know this from my resource expertise in the diamond world. Did you know that after World War II, only 3% of Americans used a diamond to validate a commitment for marriage? Only 3% is now 80 because De Beers influenced, but they control the supply. It
Yeah.
wasn't capped at 21 million coins until the Russians started flooding the world with diamonds. The De Beers had such a monopoly that they grew 80% adoption. Then in the 65, they went to Japan and did it all over again. So what happens is that scenario shows up in the world of art. If you have one of Picasso's original prints of 100, or you had Andy Warhol's 1,000 prints of Mao that came out at $1,000, they went up to $50,000 because the supply was limited. The adoption and the growth of China and the adoption of Andy Warhol art, it grew exponentially. Well, this makes it very easy and understandable why Bitcoin, using Metcalfe's law, will grow exponentially. What other important laws are there? Are like Moore's law that says the engineering and the cost of a chip is going to drop every couple of years, and therefore it's more affordable for more people, and that's driving the technological evolution. Well, you have these laws that are very important, but never forget Murphy's law. Because you just don't know when you would think that this year Bitcoin should be on a tear and has gone through a correction. So Murphy always shows up.
Yeah, great point. And I love the example of Metcalfe's law and network adoption. Now, you mentioned that in certain instances, certain Satoshis were more valuable. Talk to us about what you're encountering in the open market with folks looking to buy Bitcoin, whether they're institutions. Are they focused on where this Bitcoin was mined and what type of energy was used to mine it?
No, there is for Hive being green only. Intel approached us, and we were the first. We have many firsts in this trajectory of Hive evolving. We're the first to balance the grid. Before it became a big benefit for Riot coming into Texas. We were doing this in Sweden. And first to recycle the electron of energy from a data center into a manufacturing building and save that building as 170 workers, saving them $300,000 a year on their electrical bill. So with that, what we found, because we have Hydro, Intel reached out to us to create the first ASIC chip with them. And it became the Buzz Miner. Then they got out of the business. They had other problems of not enough R&D to compete with NVIDIA. But they approached us, and NVIDIA allowed us to buy GPU chips that were also used for AI. Other Bitcoin miners that were only miners bought NVIDIA chips. They could only mine Ethereum. We had the ability and the skill set of mining Ethereum. And when Ethereum went away from proof of work to proof of stake, we were able to repurpose and start using our GPU chips for AI adoption. And that business is growing slowly and nicely. We see many people coming out and raising a lot of money in the Bitcoin mining to get into the HPC realm. The only people that we see successfully have done it has been Core Scientific, and that's predominantly because CoreWeave is funding it. It's very expensive. For your listeners to understand, 1 megawatt of electricity for Bitcoin mining is going to cost you about $1 million of infrastructure spending.
Wow.
If you're going to go to high performance computing, what they call tier 3, it's a minimum of $10 million of infrastructure spending, excluding the chips. So last week when I was at the blockchain summit in Washington, Cambridge Analytics of University of Cambridge had a study, and they said the cost of going through the transformation from Bitcoin mining to high performance computing for AI is 33 to 1. It's a much bigger spend. So what did we do that was unique? We put our chips on bare metals platforms, and where coders could all of a sudden rent them by the hour. They don't have to be locked up in long, like on-demand supply. And that's what we've been able to provide. And we continue to buy more NVIDIA chips. And we're going to start building our own data centers that are only high performance computing. But to get the same revenue for a 100 megawatt Bitcoin mining facility, you need only 10 megawatts for high performance computing.
Mm.
So this 10-to-1 ratio is important to recognize, but the chips are much more expensive. You're spending $35,000 for an NVIDIA chip, not $3,500. So it's for investors to recognize there are big differences. And then when you're a technician mining Bitcoin, the skill set is very different than GPU chips. It's like driving a Bronco truck versus driving a Ferrari. The engineering, the skills, the temperance, like the Ferraris always have to be brought in for updates and checks, etc. A Bronco's rugged, and that's what ASIC chips are like. They're rugged, and that's the big difference that you see. But for us, we're so excited about what we're doing, in particular in Paraguay, which I want to come back to because we are balancing the grid in a different way, Tony.
Mm.
In Sweden, we are able to hedge and give back the energy whenever there's a spike in the energy, go from 30 megawatts to 3 in 15 seconds and back up. But in Paraguay, they built the biggest dam with Brazil in the Western Hemisphere.
Mm.
And half of the electricity goes to Paraguay and the other half goes to Brazil. If Paraguay doesn't use the energy, it all goes to Brazil. And so they were taking this energy and they were selling it to for a slight markup to Argentina. And Argentina was a disaster till Malay came in and it was no pay. So it had a huge fiscal strain on the government running their business. And so now we've seen Malay give back some of the money. So they went from no pay to slow pay. But Bitcoin miners, they get paid every month.
Mm.
So it allows them to get US dollars every month. And it's an embedded currency hedge that no bank has the capital base to do except for Bitcoin miners. And when we come in, we help build their infrastructure out. We take this raw, high voltage power, which would blow out any normal hair dryer or toaster, down to low voltage that we need for these data centers. And that's $15 million spend. You know, it's a big spend, but we help the economy. We help the country. We are now employing 300 some odd people building our data centers out. We're already starting on turning on some of the machines. And we'll have a material number next week. That's what we're hoping for as machines come in and the wires come in. But there is sort of the exciting part is that we'll become the biggest user of electricity for the ND is called a utility owned by the government. So we'll become an important balancing of the grid for them in a different way than we're balancing the grid in Sweden.
Wow. And with how things have changed for Bitcoin and crypto, I mean, United States is looking to establish a Bitcoin reserve. You have all of Wall Street here looking to launch different products around Bitcoin. They've obviously launched the Bitcoin spot ETFs, and we're seeing a lot of demand there. Are you on the mining side now getting a lot of demand from investors or customers who want to use your services because we're seeing some sort of game theory play out here for the Bitcoin?
We are. I think that the first big wave of the U.S. becoming a dominant player took place when China dumped all the machines and put people in jail and confiscated, destroyed all the ASIC miners that they could. The idea was important for the listeners of being decentralized.
Mm.
And I'm going to sort of weave back and forth, but in the world of gold, like Bitcoin, there are similarities. They're decentralized. So no one government, no one country, no one central United Nations controls the price of gold. And so central banks use gold as a medium. The same thing was with Bitcoin. The big attraction with Bitcoin is that there's 195 countries, 195 central banks, but there are now over 20,000 nodes around the world. And you've got to think of it like the old imagery from watching Star Trek or Star Wars, where they have a force shield around them and missiles come in and the force shield sort of bends and then comes right back. It bends, it comes right back. That's the Bitcoin force shield around the world.
Mm.
And so China blows everything out and it bends, the prices come down and difficulty comes down and then comes right back stronger than ever. And who made it stronger was America. in particular the state of Texas.
Yeah.
And so when you start going down the path of what is gold, what is paper money, where you start realizing it all started with the Magna Carta in 1215, where private property rights led to humanitarian rights. And whenever in the past 30 years they've taken away private property rights, like Venezuela, they've taken away human rights. So really, they're connected. Private property and human rights are really so cemented together. And the evolution of private property rights really grew with common law, not with civil law. It grew with common law. Patent law was important. It came from common law, then civil law copies which takes place in common law. China built their stock exchanges based on common law rules. The only way to attract capital. If you go in downtown Dubai, which is civil law, Sharia law all around it, they create a square mile, which is common law. And that is the best property rights. So the idea of Bitcoin really comes out of the concept of private property rights like gold. So I have cash in my pocket here, and this is my private property. This is mine. It's in my pocket. When I put it in the bank, all of a sudden I don't have total control. I've lost my private property rights if they want to shut down or make it difficult for me to get my ATM working. The card doesn't work. So recognizing what is private property, in a lot of parts of the world, it's the gold bangles. The women that got out of Syria the first just took off their 24 karat gold and they got out. That was their portable wealth. The same thing with Vietnamese people, the boat people in the 70s. They got out first, they called a gold tail, a gram of gold got them out. That new ticket out of an oppressed country will be Bitcoin because you're able to protect. It's more portable than gold. But it's not as pretty as gold unless you make the Bitcoin design and logo. But gold can be made into so many beautiful jewelry and images, especially when you go throughout India. Every state in India has its own unique design, but it's all 24 karat. And so I think that what we're seeing in the evolution of the digital world is that Bitcoin, no doubt, is the critical element, and the blockchain. Which I'm giving a speech next week in Paris on it, how it was looked at back in time with 91 is when two professors at basically Bell South Labs basically invented blockchain as digital timestamp. It went nowhere, and along comes hashing power to try to stop spam by Dr. Beck as a cryptologist, which is really fascinating to watch. And then we have a big gold by another cryptologist, by Nick Sasbo, but they just are stepping stones. And then we have Napster, which shows the power of peer-to-peer. And then we have the Defense Department of the U.S. unleashes SHA-256, which is the encryption that's used on your cell phone for facial recognition. And then we get aha moment, Bitcoin. Now, what's really important for your listeners, and I know this from my global investing, 5 years before Bitcoin was released in January of 2009, before that came a technology called M-Pesa. And M-Pesa was the telecom wanting to find a way to bank the unbankables in Kenya. And it exploded. Like it's more than 10% of the GDP of Kenya today. I was with a driver in London 6 months ago, and he was telling me how he uses it to send money to his family. He gets paid as being a Uber driver in pounds, and he's able to easily convert to send it down to Nigeria. Another driver is telling me in Ghana. So M-Pesa technology, which showed you the idea of digital timestamp, you realize the real biggest centers of money in the world are telecom companies. Yeah. And banks need the telecom actually to make it work. But they've been trying to stop the evolution and the adoption of Bitcoin. The bank lobbying groups in the US have had a major significant political influence of harming the adoption of Bitcoin. But I think we're gone past it. We're still going to have this volatility. I agree with Abigail Johnson that blockchain, all stock settlements should be on the blockchain. All federal financial disclosure, et cetera, should be on the blockchain. The confidentiality between the two parties is there, but it's all time stamped and an open ledger. I think these are all, this adoption is in full speed, and Bitcoin proved it. All the other crypto coins, it's all because of Bitcoin.
Yeah,
And
absolutely. Oh, sorry, I didn't mean to cut you off there, Frank.
no, you didn't. You did. I just started
Okay.
talking, but I need something to drink because I get so excited talking about it. This technology and how it's evolved, and I see the significance of the ordinal market. I see the significance of Bitcoin. What really surprised me is that hearing last year, Bitcoin is dead. Bitcoin is dead, and I'm scratching my head. If you stop Bitcoin mining, then the whole Bitcoin ecosystem actually dies. You need to have these nodes everywhere in the world validating. You need to have this decentralized mechanism. And I think what's going to happen is that Paraguay will become the most dominant place in South America.
Wow.
And probably you're going to see in East Africa, Ethiopia is doing everything to be part of the crypto mining ecosystem. And I think this is really important that America and Europe is going to be in Germany and Sweden and Norway are going to be really key for this ecosystem to continue to evolve, and new technology will come along with it.
Hmm. Question on, you mentioned that the mining needs to happen or the network fails, right? Eventually, all Bitcoin will be mined. What do you think happens after that? Will miners keep going to handle transactions and fees?
Absolutely. And there'll be new technology, new breakthroughs like ordinals
Mm.
of how you attach a piece of art. And what a lot of people didn't understand was that having a picture of my 9-year-old daughter walking down the beach in Miami, holding her hand on her birthday, and there's a photograph, and all of a sudden the value, I want that ordinal. I want to just get that ordinal, attach that photograph, and digitize this moment in time, and I can go and get that exact hour. I mean, that's incredible. So the value of that number goes from 0.0006 to all of a sudden worth $10
Mm.
because I'm emotionally attached to that photo. Well, someone else is in Prague, another person is in Buenos Aires, another person is in Singapore. They're all having these emotional moments, and those emotional moments all of a sudden can be locked in time and digitized at a specific number, 64 digits. I think is very exciting and only makes the network more valuable, especially when you think of moving grams of gold.
Mm. Yeah. Tell us a bit about your strategy as far as when you mine Bitcoin. Are you selling it? Are you holding it? Or is it like a 50-50 split on how you handle the actual tokens?
We were the first to do hodling, and we were hodling our Ethereum, and it was a big win for us. And we sold all our Ethereum. We did not get into the staking game. And so we then started increasing our Bitcoin. We've used it because one of the nice parts, there's third-party analysts will share with you that we have the highest returns on invested capital.
Hmm.
So we are, if you look at our Bitcoin operations, besides being the most efficient mining facilities of how we function, we have the lowest G&A to mine a Bitcoin. We have the highest revenue per employee mining Bitcoin. And we're very frugal of how we manage the operations. And that sort of lends itself into the Bitcoin mining or putting it on your balance sheet, because there's a time when you have it. So we had in our balance sheet, and it grew. It was 60% year over year. Each month it was growing, 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 and we're expanding into for 100 megawatts into Paraguay. And all of a sudden, Bitfarms opportunity came in that not only are we going to go 100 megawatts, we're going to tack on 200 faster. So we would use and sold some of our Bitcoin at 101,000, 90 some odd thousand to be able to lock up and get that transaction. And it worked out well. We all of a sudden now have a growth plan of not going from 6 to 15 mega exahash. We're going to 25, and we have the strongest growth profile. And it's different than these other crypto mining companies that have been doing all these convertible notes to buy Bitcoin. That's to me, that is the brilliance of Michael Saylor for MicroStrategy. Michael Saylor is done. But all of a sudden, all the other mining companies getting into that realm, all they've done for me is create shorting on their stock. They do these financings, and now you say, "Oh, we did $750 million." Well, they had to go buy back stock because the people were shorting against the position. And most of these guys are offside now, that they were buying their Bitcoin. And so every time there's sort of been binge buying going in of a debt, and you've seen this when they were all going to Celsius to borrow and other groups at 14%, it dismantled Argo. It really hurt many of these crypto mining companies.
Yeah.
HIVE has never done that. Every crisis that happened from Celsius to Ethereum going away to Sam Bankman and FTX blowing up the industry, during that 6-month period, we still had operating income because we run this operation, what we think. So we're being contrarian. We turned down doing a convertible note to go buy more Bitcoin. We said, no, we believe in Bitcoin. That's why we're going to buy more machines from all the providers. And that's why we've been able to, we're not going to do these convertible notes to buy more Bitcoin. We would sell some to increase our footprint, and then we can replace it very quickly in our balance sheet. So that drives the highest cash flow return on invested capital model of all the crypto miners.
Frank, what are your thoughts? And I have a bit of a concern on this. We saw GameStop just enter the game. They're going to raise 1.5 billion to buy Bitcoin. I am a bit concerned about what Michael Saylor and Strategy is doing because of the amount of leverage. Not that if they use their cash on their balance sheet to buy Bitcoin, no problem with that. But the excessive leverage, are you concerned at all about that?
I'm not so much concerned about him, because what we have found with HIVE is that these funds are shorting HIVE, and we're not doing the transaction because the size of some of these other crypto mining companies, the funds they're raising, they can't get short the stock. Here's, you have to understand capital markets. These convertible notes are often leveraged 8 to 1. So they're going to go and short the heck out of your stock so that they're not going to have this risk, and they want to torque on the upside. That's roughly what that model is. Michael Saylor being the first to do this on a scale, and then all of a sudden you see an ETF created with Tesla, a single purpose ETF with Tesla. And what does that single purpose ETF do? It does covered writing. Because Tesla is so volatile, money comes in, they immediately sell 20-day calls. So the income coming back to that investor is 2% a month, 24% a year, sometimes higher. So Tesla goes down, but they're still getting this return on capital, and they put that in their 401k or their IRA, and they're getting this income coming back basically tax-free. MicroStrategy does it too. Well, what does this really mean? Well, it means that when a market maker has to go and go short because he's going long the calls, he's forced to do the cover writing, it creates more trading. And then they go borrow from the ETF. So a lot of these ETFs will lend out their stock that money's gone into. So it's all a borrow game. And it's all trading off of basis points. Well, MicroStrategy has so much more liquidity, just like Tesla has so much more liquidity. I think the only company now has been Marathon has been able to get some type of a product where their money's going in to do the cover writing program. All these traders are trading between various pools of capital. They call the dark pool, they call the listed on NASDAQ pool, and they're trading for basis points in between all these markets, this arbitrage that's going on. And so what investors have to realize is they're often leveraged 8 to 1. Well, some of these funds that are leveraged 8 to 1, they can only handle volatility of 3 to 5%, and they're out. They unwind their position. So Bitcoin starts to sell off a bit, they sell 8 times.
Hmm.
And so you get this greater downfall. And for me, it's frustrating because we're falling with Bitcoin prices, but we're growing our revenue, we're growing our petahash, and we're funded. So I'm very happy where we're positioned for that growth. But we do see that we're being used as a case. So some of these funds say, let's take 10 crypto mining companies and we'll short the whole basket to buy this convertible note. That's what's going on. And it's very different than MicroStrategy, which has $1 billion ETF that has much more liquidity around it for him to go do his funding.
God, I appreciate that clarity.
I'm sorry if sounds confusing.
No, it's great insight, and I'm definitely learning here. I appreciate that knowledge. I want to get your thoughts on the Bitcoin reserve and what we're seeing globally. We got Bhutan that has been mining and buying Bitcoin as well. El Salvador. Well, the United States just put up a big flag that we want to establish this Bitcoin reserve. Frank, do you see central banks in the coming years holding Bitcoin like they do gold?
I think all the tariff war right now is creating a distraction from central banks sitting down around a table to say we better own some, or government politicians to own some. And we've seen the unsettling of what's taking place right now. And when you look at governments, as I do this as a money manager, and I write this in all my prospectuses, we believe that government policies are a precursor to change. Thus, we monitor and track basically if you look at the G10 countries based on GDP or population, they will move markets around the world. So you have to look at either fiscal or monetary policies. When we see there's a trade war with tariffs, that's a fiscal policy. Historically, when this starts to take place globally with the G10 countries, then the global world starts to shrink in trade. And it's trying to find a balancing until all of a sudden it changes. This cycle under President Trump is driven differently than in the 30s. In the 30s, it was driven by farmers. Farmers had a big say in politicians and voting. And they came with the Hoots-Smalley tariffs, and it created this tariff war, and everyone in the world hated America for a couple of years. Then they had to redo it all, and they start getting back. But it takes long to rebuild those relationships. And so we're just in the vortices of this sort of downdraft of people trying to figure out what will the trade wars mean. Is there legitimacy to it? Who's behind this in a big way? Are unionized manufacturers. You saw when President Trump spoke this week, he brings on the union bosses to talk about what's happening in manufacturing. So this is political. There's a rational reason behind it. How it's delivered is not for me. I think that how you treat Canada versus how you treat China as the same blunt hammer is just not good, but it's what it is. And it creates a sort of unwinding in the capital markets, which has impacted Bitcoin prices.
Yeah.
Because Bitcoin has now gone mainstream with ETFs. It's recognizing that transition of coming into this ecosystem. So I think the adoption will continue. I think when we get stability on the tariff dilemma of where things are, that all of a sudden other governments will start to acknowledge that. In the interim, they continue to buy gold. And the financial calamity, we're continuing to see central banks buying more gold, and gold has far outperformed this century the S&P 500. And gold has been accepted since they created the GLD. The Bitcoin ETFs are unprecedented how fast they grew in the acceptance of them as an asset class. But I still think it's just we're going to have to get stability on the tariff dilemma before we get stability on Bitcoin, a pricing mechanism. Then we'll get governments. I believe that will happen. I believe that we'll start to see other jurisdictions You're seeing now Europe raising almost $1 trillion to create their own military manufacturing regime because of the statements made by President Trump. What we've also seen in a very quiet way, index owners in Europe have changed the index holdings of the Magnificent Seven because of market cap. They grew so big, they automatically said, no, they can't grow more than 8%. There can't be 15% of their indexes for all their pension funds. So there's been selling. So we're now feeling that selling pressure in the stock market. And so it's just a reset button we're going to go through. I don't think it slows down the retail, the coders in the Bitcoin ecosystem. I don't think that gets dented. I think the use of AI, of how they can make data centers better, how they can do the nodes better. I think we're going to see that become more granular. It's estimated in the next 5 years that we're going to go from, which open up the concept of AI for everyone, from these open generative, use the internet. So they're taking all the data just from the internet. What's happening is they're going to do nothing but law, nothing but medical research. There's 900 types of cancer. They're going to become focused, and you'll become a data engineer on an expert medicine for one of those cancers using AI, and you will take all the research papers, et cetera, start building that database. So we're going to see a huge growth in data engineers. Besides data scientists making a lot of money today, it's going to be the builders, just like Bitcoin building these data centers. We're builders. And what I share with your readers, you got to think about, there's no one central government, but we, the people, investors putting money into HIVE, have built these data centers for this decentralized mechanism in the world. HIVE has been the leader in being all over the world. We're not just in one state or country. We will now look to go into America because the government's policy under President Trump are not vilifying anyone in the crypto ecosystem. Unless you're a bad actor, they'll go after you, and I think that's great. But overall, they want to attract. Texas wants to attract, so we'll look for opportunities in America. But until the stability was here, which is now, we have gone all over the world, and we are part of decentralized Bitcoin mining, and I'm proud of that.
I love it, Frank. I love what HIVE is doing, and you're taking a different approach than the other miners out there. I know we're coming up on time, so I have some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
What was the question? Sorry, metaverse?
Yeah, if you could create your own metaverse, put your Oculus or Apple Pro on, what would the world be?
What would the world be? It would be just what it is today, and hopefully the process of technology and digital will take more people out of poverty. The electrifying of what you're seeing in Ethiopia, the building of the infrastructure, what we're doing in Paraguay, we're building out the infrastructure. We'll put more electricity, more air conditioning in all the kids' schools. We're already doing that right now. We're putting air conditioning in a school near our data center. It's 90 degrees Fahrenheit and there's no air conditioning. So that's one of the first things. So that helps overall and educate people, so that more people are educated, more people are having a GDP per capita that allows them to feel they can enjoy the freedom that Bitcoin provides them with. The last thing I want to share in my journey was realizing in Argentina, which is so close to Paraguay, is that Argentina in 2002 confiscated all your bank accounts that had US dollars, and they still haven't given them back.
Wow.
And that allowed for Tether to grow in many countries. So when you went there, there's no foreign currency exchange. Banks will not, they'll give you pesos at a very terrible rate, but you have to go in the street and they'll give you much more. That whole economy has stayed alive because of $25 billion of cash in pillows. And it's recognizing that, and the last part in that, the idea that it's going to evolve with Milei in a very positive way. But coming back to Paraguay, for your listeners, Paraguayans love Americans. I'm going to repeat this. Paraguayans are not Maduro from Venezuela. They're not Pedro from Colombia. They love America. And why is that? Because there was basically 90% of the men were wiped out in 1870 when Brazil and Argentina and Uruguay were trying to take over their rich land of soil. And President Hayes in America solved that problem. And Paraguay to this day celebrates as a national holiday on November the 12th. And one of the richest state in the country is Hayes. So they are there today because of America.
Interesting. I didn't know that bit of history. I appreciate that context. I'll have to research that after. Some rapid fire questions. Favorite food?
Pardon me?
Oh, I have some rapid fire questions for you, such
Go.
as what's your favorite food?
My favorite food?
Hmm.
Probably bread. Different tastes and different flavors of bread.
Favorite musician or band?
I'm, for whatever reason, let me see if I turn up my volume here. I didn't. You, I apologize.
Oh, no worries. We'll edit accordingly. But favorite musician or band?
My favorite musician, Earth, Wind, and Fire.
Favorite movie?
Favorite movie, Chariots of Fire.
Favorite book?
Favorite book. Well, I'm such a big reader. You have to fiction, nonfiction. Tom Clancy, if it's fiction, if it's biographies, and autobiographies, I would say probably in the sciences. There's so many of them. But one of the books is a money manager, is a book called Misbehavior of Markets. It's by the mathematician behind fractals and how it relates to the stock market. And it comes back from Einstein. So it's called Misbehavior of Markets. I love books by Malcolm Gladwell. About his simple books and easy to read. I find he does a great job of making you look at the world differently. And I quote a book that's called The Wisdom of Crowds, John Sorowiecki wrote. It's a wonderful book about when are crowds wise and when are crowds foolish.
Interesting. I'll have to check that one out. It sounds fascinating because I often talk about herd mentality when it comes to markets. So I'll definitely check that out. And when you are not working at Hive, what are you doing for fun?
I'm blessed with a 9-year-old daughter, and I love to travel the world, and with her and my wife, and I run. I'm a runner. I just turned 70, and I went out and ran 7 miles, and I thank God every mile that my knees are still good.
Wow, that's amazing, Frank. That's inspirational right there. Frank, absolute pleasure. Love what Hive is doing, and I would love to have you back on in the future. Thank you so much for joining me.
Thank you.